Right, ladies and gentlemen, the session you are waiting for, my session. This session is on Islamic capital markets. This is the second session after the lunch. Stanley did a very good job, I must say that, after the lunch. We started about 10 minutes late, which can be forgiven, given that I think we went to lunch a bit late as well. The capital markets or Islamic capital markets have been developed in different parts of the Islamic world, especially in countries like Malaysia, where there is a very vibrant Islamic sukuk market. And of course, sukuk market or bond market is not the only one component of a capital market. Rather, we have equity markets as well. And today in the panel, we have predominantly the people who have huge expertise in Islamic equity markets. Our first panelist is Datuk Noripa Kamso, who is CEO of CIMB Principal Islamic Asset Management Malaysia. She has a very, I should say, in-depth understanding and practical experience of Islamic fund management. So she's already here. I have requested her to be on the panel, and Dato, if you could sit on that side, that would be really good. That's great, thank you. Our second guest this afternoon is Rehan Pathan. He's not a cricketer, but his name is like the cricketers. Rehan Pathan is head of sales for NCB Capital from Saudi Arabia. Rehan's real expertise is in distribution of Islamic products, particularly Islamic funds. And he's going to share with us, if you could kindly go on number one over here. He's going to discuss with us his insight into selling Islamic capital markets products with a special focus on Islamic funds. He has not sold Islamic funds only for NCB. Before that, he was with Deutsche Bank, which started its Islamic funds when Rehan was with them, and he sold quite a lot of those Islamic funds during his tenure at Deutsche Bank. Our third guest is Kamal Mia, head of asset finance with Saudi Hollandi Bank. He has a very wide range of perspectives on different aspects of Islamic finance. Today we are going to ask him some difficult questions on sukuk market in Saudi Arabia, given that he's based over there, and he's based over there for some time. But yesterday he changed his loyalty from Saudi to Oman by wearing this hat. Yeah, so if you could. Our fourth guest is Tariq Arifai. Now Tariq comes from an institution which has played a pioneering role in the development of Islamic fund management industry. Dow Jones was the first international organization which came up with a globally acceptable standard for screening of stocks for Sharia purposes. So Sharia screening methodology, if you could kindly sit over here, Tariq. Sharia screening methodology, as developed by Dow Jones, has become the most widely used Sharia screening methodology in Islamic fund management industry. So we have people who are actually experts, real experts in their fields. The fifth expert, he decided not to be with us because he was afraid of so many other experts. So Stuart Crocker, unfortunately he couldn't travel from Abu Dhabi. Maybe in next year conference, he would join us. So we have a very distinguished panel. Thank you very much for joining us this afternoon. Given that this is a relatively short panel, about 30 to 45 minutes, I would like to start directly with a question. Okay. My first question would go to Rehan, because you're sitting on that side. Okay. My observation, and this is consistent with observation of so many people who works for Western institutions, is that Western institutions somehow, especially Western Islamic fund managers, have somehow failed to raise a lot of money from Islamic markets. Okay. Whether this is Saudi, wider GCC region, or Malaysia, Brunei, Singapore, Indonesia, there is a perception amongst the Western fund managers that there is no money for them. Okay. Given that you have been in the market for long and you have raised a lot of money for your employers, Deutsche, as well as for NCB Capital, what are the reasons, okay, if this perspective is true, that there is no money for Western Islamic fund managers, what are the reasons why these Western fund managers have not been able to raise a lot of money from Islamic sources?
Okay, Bismillah ar-Rahman ar-Rahim. Assalamu alaikum, everybody. Now, it's a question, I think, which needs to be taken in two parts. It's a valid question, and it's the reason that many international banks, many international asset managers have started the asset management business with Sharia funds, and then they've closed it down. My previous employer, Deutsche Bank, is one of these examples, as you know. From 5 funds that they launched, they ended up closing 4. They only have 1 running. Now it's a good thing and a bad thing. It's a good thing because you have international institutions which come into a very local market as such, and they bring expertise, they bring competition, and they bring different asset classes which we should invest in. It's bad because it gives the indication that this is not a viable business, just as you said. I think it was very early in the game for most of these individuals, most of these institutions, to withdraw from the game. Asset management is a business which has historically been around for many years, and it's like the insurance business. It's a marathon. It's not a sprint. You have to go very slowly. You keep building it up, and you go. If you try and gauge what happens in 2 years, as opposed to what happens in 20 years, they're completely different scenarios. So one thing has been that they have not had the longevity to go the way, and this is, Deutsche as an example, UBS as an example, you can name a few more. Part of this has been that it's not their core business. So if your core business is, 99% of your business is on the conventional side, and you're experimenting with the 1%, and that 1% doesn't give you what you want within the time frame, you let it go. And that's been, I think, one of the reasons. The second part of this, and Dr. Knoropa will help me out in this, is that the existing markets, the 2 core markets for these have been domestic markets in 2 countries. So if you take the global assets under management Sharia funds, it's within Saudi and the GCC, but mostly within Saudi, and within Malaysia, you have 2 things. And the markets here are very domestic driven. They're led by domestic banks. The funds are in domestic currency. They invest in domestic asset classes. And this is a restricting factor for those. And for an international bank to come compete with the local banks in these markets, it doesn't make sense. And most of these domestic banks are not open architecture. They manufacture what they sell themselves. This is not to say that there is no scope. I think there is a lot of scope. But I think they have to do it in partnership, and those that have done it in partnership have raised a lot of money. The Saudi banks are a good example. Siam Principal is a good example. So I think that's the way going forward as well for that.
Thank you very much. From here we go to Datuk Knoripa, because Datuk Knoripa's firm is actually a joint venture between CIMB, which is an Asian firm, and Principal, which is a Western firm. What is your experience on the Principal Asset Management? Are they happy with their involvement in Islamic business?
I've got to say yes. Yes, that's marketing for me. CIMB Principal Islamic Asset Management, if we combined with the whole asset under management under CIMB Group as well, the Islamic AUM is $3 billion US. And for the last 2 years, I have been able to actually garner 780 million US dollars, 11 portfolios, institutional clients.
What is the secret?
Importantly, it's the track record. What Rehan has just mentioned, the real challenge in our competitors' inability to garner in the asset under management is because of the inadequate track record from different asset classes. The conventional asset classes has been there for the last 70 years. But really, Islamic asset management has been there for just about 7-8 years on an international basis. In Malaysia, it probably started in 2001. But anyway, outside Malaysia, we could see that it is the end of the value chain. And the tipping point, in our experience, in getting that traction the last 2 years was because of what happened in the Eurozone and all the black swans that has been happening the last 6 years. We have been using it as an opportunity in Islamic asset management that there has been the mortgage crisis, there has been inflationary fears on oil prices, there has been financial crisis, there has been the tsunami in Japan, there has been the Dubai crisis, there has been the Eurozone debt crisis. With all these crises, the market was so volatile, but the Islamic equity asset class, which uses a screening process that takes out high leverage companies, that takes out high receivable company, and that takes out companies that are using unproductive cash, basically leaves a very stable and less volatile portfolio that grants a comparable risk return on a long-term basis with the conventional. So with that track record, it was actually easier for us to capture a growth from the institutional space.
Thank you very much. I'll come back to you, Kamal, but Tariq, given that you are an Islamic index provider, what is the sale like in the recent past? Have you licensed a lot of conventional players in the last 2-3 years, or the business coming from conventional players who are involved in Islamic finance has gone down, and the business coming from purely Islamic businesses has gone up?
Okay. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullah. First of all, our business really is working with asset managers for funds and other investment products. And historically, the majority of our customer base or our users, which are the fund managers, have been European-based fund managers. That's not to say that they're not managing funds for Islamic institutions or Islamic banks. They are. But for example, if you look at the Islamic banks, they may not have the expertise in managing equities in Europe, equities in Asia, equities in the US. So what they do is they tend to have another manager manage that particular portfolio on their behalf. So from our perspective, that's who the entity that we're dealing with is. Over the past few years, I would say the trend, I think in 2006, we started to see some interesting developments. Number one is that's when we launched the first Sukuk index to track Sukuk. Obviously, it's been very popular, and I think Noripa can speak more about the Sukuk market and what's developed in it, or what are some of the challenges that it still faces. But there's a lot of interest in Sukuk, even though obviously we had a financial crisis, and then we had some other more domestic issues with Sukuk. But I think it's still a very stable asset class, and even now we're seeing conventional financial institutions start to look at Sukuk. There are a couple of reasons for that. Number one, a conventional bank likes Sukuk because they're not seeing the volatility they see in the conventional bond market. Number two, they don't. They see that it's a funding door that is still open. On the conventional side, if you're an institution looking to raise euro or dollar, it's very challenging for you right now. However, if you go to the Sukuk market is still wide open because there's a lot of demand for good quality Sukuk issues. That's one development. Other developments, I would say, are the shifting from one area of the world to the next. I think 2006 and earlier, the growth or the demand for funds, and you guys here can correct me on this, in the GCC has been really focused on investing in developed markets and slowly started to look at emerging markets. Came the financial crisis, and all of a sudden, There's no more interest in developed markets. There's a lot of interest in emerging markets with a special focus on GCC and the MENA region. Then we had the issues with the MENA region, and of course, if you want to call it Arab Spring, and all of a sudden everybody has shifted and said, no, 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 we don't want MENA anymore either, or developed markets, and emerging markets are looking a little bit risky. We want to look at Asia. So a lot of the Islamic funds, I would say 2011, the focus has been on Asia, and now we're starting to see that Asia is good for now, but we're really thinking Asia may not be the next place for us next year. So now the interest is in safety. And if we talk about Islamic products, Islamic investment products, I think Islamic investment banks are doing an excellent job, but the real gap in the market is on fixed income products. For example, if you're an Islamic investor and you want to have a well-balanced portfolio, you have some stocks, you have some fixed income, you have some takaful products, you're going to find that you have a big gap in your fixed income portfolio. That's where I think a lot of push in the market needs to go, is to try to find solutions, try to find products in fixed income. So now what happens is the Islamic investors are looking for fixed income products, and the solution has been, for now, or for this year at least, they're looking at high yield or high dividend paying stocks as a way to build a portfolio that also generates income.
Thank you. Now, talking about fixed income, Kamal, what is the Saudi market like for sukuk? In the recent past, there have been a few problems with at least one big, probably more sukuk. Now that the markets are coming out of the crisis, and Malaysia has become very, very active in sukuk market in terms of attracting players even from the Middle East. What are the prospects for sukuk market in Saudi?
Okay. Thank you. Assalamu alaikum, everyone. Saudi market, as you know, has been evolving slowly. And there have been good reasons. I know some people have been predicting for now several years that we are going to have a boom, or we are going to have like billions of dollars of worth transactions next year in Saudi market or in GCC. As we have experienced or we have seen in past few years, taking the issues to capital markets takes time. It's education of the issuer, it's learning curve, a steep learning curve for them, and also making them ready to go to the sukuk market. Another reason why the Saudi market, I would say the volumes in sukuk, numbers and volumes both, have not been as many and as much as we were expecting, and compared to, let's say, Malaysia. There are several reasons, and one of that is that Saudi bank market is very deep and big. And the banks have huge capacity to provide credit. And as all of us know, bank market is always the cheapest market to meet your funding needs. So issuers will only go to debt capital market when they have exploited or when they have really got their line filled from the bank market, and then they are happy to pay more and go to debt capital market, which is very much non-bank market as we know. So what has happened in Saudi Arabia, and it was, I think, very good for the market, that semi-government, quasi-government institutions like SABIC, like Saudi Electricity, they were the leader and pioneer to open up the market. And that's true with any market. You want to bring the blue chips of the market to start to offer a new instrument, so the people have the comfort, they are happy to take that risk, and then slowly grow it. Now, if you look at Saudi, still it's a very shallow when it comes to the number of issues, though the size of issues, because of being quasi-government, have been big. You have billions real worth of issues, but the number is still very small. And the reason simply is that, one, it takes time for issuers to be ready, and then issuers also do not find the need to go to the capital market as fast as it has happened in other markets, because of having a very good bank market to support their business needs.
Thank you very much. If from the floor, if you have any questions, could you please raise your hand? In the meantime, very quick question from you, Tariq. You know, Thomson Reuters has recently launched this Islamic interbank benchmark rate. Quickly, in 1 minute, what is your